Nvidia, often hailed as the king of AI, has seen its stock soar, leading many investors to believe its growth is unstoppable. However, behind Nvidia's impressive trillion-dollar valuation lies a hidden fault line, one that could significantly impact the entire AI market. Today, we're uncovering the surprising truth about Nvidia's growth prospects and why its future might be more uncertain than commonly perceived. Nvidia stands as the world's foremost AI chip maker, powering critical technologies from ChatGPT to autonomous vehicles, medical research, and national data centers. The company commands an impressive 80 to 90% of the AI accelerator market, with its chips being highly sought after by companies globally. Yet, beneath this widespread acclaim, Nvidia's future growth rests on a foundation that could prove fragile. Should key supporting pillars falter, the narrative surrounding Nvidia could shift dramatically and swiftly. Let's delve into the first and potentially most significant risk. Nvidia's major customers are increasingly becoming its direct competitors. A crucial metric highlights Nvidia's primary vulnerability. Approximately 39% of its revenue is concentrated among a handful of key customers. These include tech giants like Microsoft, Google, Amazon, and Meta, indicating a significant dependency rather than just concentration. The surprising reality is that these very companies are actively developing their own AI chips. This strategic shift is driven by the fact that Nvidia's chips are often expensive, power-intensive, and in limited supply. Their goal isn't to perpetually purchase from Nvidia, but to ultimately replace Nvidia's offerings with their proprietary solutions. Google has its TPUs, Amazon offers Trainium, and Microsoft is developing Maya, each a direct alternative. Every new chip these companies produce directly translates to fewer Nvidia chips sold, intensifying the competitive landscape. This isn't about a new startup challenging Nvidia. It's about Nvidia's most significant customers evolving into formidable rivals. Even a single cloud giant reducing its Nvidia spending could result in billions of dollars in lost annual sales. Beyond customer competition, Nvidia faces other significant challenges, starting with geopolitical factors. China, once a substantial market for Nvidia's data center division, is now largely inaccessible due to U.S. export restrictions. This means Nvidia cannot sell its most advanced AI chips, including Blackwell shipments and highest-end GPUs, to China. This situation creates a dual problem: immediate revenue loss and China's accelerated efforts to develop its own alternatives. If China successfully develops its own robust AI chip ecosystem, Nvidia could permanently lose access to one of the fastest-growing tech markets. Another crack in Nvidia's armor is the weakening of its CUDA ecosystem, long considered its secret weapon. For nearly 2 decades, CUDA made it incredibly difficult for customers to switch away from Nvidia hardware. However, open-source tools like Triton are now emerging, offering a universal language for developers. Triton allows developers to run code on various chips, not exclusively Nvidia's, thereby eroding Nvidia's lock-in advantage. While this doesn't immediately threaten Nvidia's dominance, it significantly weakens the protective moat around its future profits. Despite these challenges, it's important to acknowledge Nvidia's powerful and enduring strengths. CUDA, even with new tools emerging, remains mature, powerful, and widely adopted, boasting an enormous head start. Furthermore, the demand for sovereign AI is exploding, with countries like Japan, Saudi Arabia, UAE, and those in Europe investing in national compute infrastructure. This trend introduces new buyers beyond traditional big tech, expanding Nvidia's potential market. Nvidia's Blackwell platform is more than just a chip. It's a comprehensive AI computing ecosystem encompassing hardware, networking, and software. This integrated approach makes Nvidia's solution significantly harder for competitors to replicate or replace. So, while risks exist, Nvidia undeniably maintains a strong path forward. In conclusion, Nvidia remains a dominant force in the AI landscape, driven by massive demand, best-in-class products, and strong momentum. However, the foundation supporting its future growth is becoming increasingly unstable. The challenges include customers transforming into competitors, revenue blocked from China, and its software moat weakening. Nvidia's story is no longer just about endless growth, It's a race against time. Its own customers are rapidly learning to create their own golden eggs, challenging Nvidia's long-held dominance. What do you believe is Nvidia's biggest risk? Competition, geopolitics, or software disruption? Share your thoughts below, like this video, subscribe for more insights, and don't miss our next deep dive.